Hey, my Freedom Founders friends, Chris Miles here. Hey, I have a quick update video to the video I just did a couple months back about the whole premium deposit fund, that thing and be able to put your money in the infinite banking and earn some extra interest on top of the infinite banking too. So there's a big update that's very time sensitive. So be sure to listen up. All right, so here it is. I showed this before in case you didn't see my last video because I know it was right before we had an event that was in Dallas. Good seeing a lot of you there too, by the way. But I had shown this very thing. Now, obviously, you guys have heard me talk about infinite banking before. You've heard me or seen me talk about ways to use this, right? How do we use this in a way that becomes a tax-free, high-yield savings account for you? What's a great place to store your cash that's safe, guaranteed, more safe, even safer than the bank, and you're getting paid right now 6% a year tax-free on that money. And of course, what I showed you in this last video is that it can actually create a tax-free income stream for you right now. Now, I'm showing this because this is an example of somebody at 60 years old and in decent health. And I think I actually did average health on this one. So it's possible you could have better numbers than this. It might be a little worse, but here's what it looks like from a normal standpoint. Now, you've heard me talk about putting it in as contributions, right? And so I'm showing this one where we're max funding this up to $60,000 a year. That's not what's required, but that's what you are able to, what you're setting this to contribute. Again, we can set that number whatever we want. This is just an example for a 60-year-old who wants to put in $60,000 a year. Now you'll see the total cash value. That's this number you see right over here on the right-hand side. That's the cash that's actually available. Even from day one, you've got access to that cash. And again, you can withdraw it. You can borrow against it by using that as collateral, even with no monthly payments, anything like that, and so on and so forth. I won't go into all the details because we've talked about how this infinite banking concept works, especially with Max ROI Infinite Banking that we do. I've already gone into that. I want to talk about the method of paying into it because this one shows 60,000 a year for 10 years. That's 600,000 total. You'll see after 10 years, there's only just about $700,000 in here. It's not like you got rich off of this, right? Over the 10 years. Now, is it better than what you would do in a savings account? 100% yes. Better than the CD? Yes. 100% protected from lawsuits and creditors in most states? Yes. Tax-free? Yes. Unlike, CDs and anything else you do, high yield savings account, this is a better place to stay liquid. But the other thing, and of course, I know some of you guys approached me about this at the last event. You said, holy cow, I'm getting this because it's this right here that's key, is the income stream you could pull off of this. So right here, I'm showing you pull off over $50,000 a year tax-free for the next 20 years. I want you to think about that. I mean, that's a pretty, granted, you're not going to get rich off of this, but the fact that you could put something in $600,000 and get a guaranteed income stream of over $51,000 a year is a pretty nice deal. Wouldn't you agree? Especially that's tax-free, and again, that's guaranteed. Again, this number can vary because it could vary based on health, your age, it can vary based on even how dividends play out. Do they go up? Could they go down? Things like that. Usually it won't go down much more. It'd have to be pretty bad. Like we'd have to go to rock bottom interest rates again. And even then it wouldn't be much less. You might be looking at 50,000 a year versus almost 52,000 a year. So anyways, that's if you just funded it like what we've normally done. But let's just say you've got a lump sum of cash and you want to keep this cash safe, but you want to keep it growing too. You don't really want to invest it. Maybe it can be part of your emergency fund, but maybe it's just money that you're saying, this is a section of my money that I want to protect. You could put some in metals, of course, and that's a great thing too. But you want to have money in here that that won't go up and down with market swings. It's not tied to stock markets, not tied to anything. What if we put a lump sum of that cash up front? You can do that. You can literally put in $600,000 up front and then have them pull off of that over the next 10 years. By the way, I say 10 years. This could be 3 years, 5 years, 6, 7, 8, whatever you want it to be, right? Like there's a range of what we can do here. Again, I'm just giving you an example, apples to apples here. But if you pay that 600,000 up front, here's the cool thing. The insurance company has an actual savings account that's paying you currently 5.5%. Now that's taxable, but it's 5.5%. That grows and builds, which then can be used to pay your premium. But because it earns interest while it's sitting in there, and yes, you can access it one time if you need to pull out that money for emergencies or whatever, you can do that. But check this out. Over here, now because it's earning interest, that 600,000 earning the 5.5%, right? Now you can pull out more per year. So now the average, they calculate all for you, is over 75,000 a year from 600,000. So now your cash, that same 600,000 you were going to pay in anyways, you just paid up front, now it grows to almost 900,000. And guess what? Now you have over 65,000 a year tax-free coming from this. So imagine this, that if you could put in 600,000 into an investment that again is guaranteed to then kick off 65,000 a year. Guys, that's over a 1% a month. That's over a 12% per year equivalent type of return, but no risk, right? None of the risk of market swings or possible losses of anything in the investments. This gives you another option to create an actual tax-free income stream that you'll be taxed never on. This is like a Roth IRA, but no risk, right? A risk-free Roth IRA. Now, here's what's interesting about this, right? This is again based on the fact that there's a 5.5% account that locks in at that point. This is what's so important, guys. This only lasts. I just heard this today, right? I just heard from the company CEO of this company, Penn Mutual. The CEO just said, starting next month, they're going to lower it to 4.75%. Now, this is for that separate account. This is not for the life insurance. The life insurance is still paying out 6% a year tax-free. That's still happening. But for that money that's sitting in there, if you go to front load the money up front, let's try to say that 10 times fast, you front load the money up front, that $600,000 or whatever money you're putting in, right now, if you put it in this month, December 2025, it will pay 5.5% for the whole time. But if you wait just 1 month, you delay or procrastinate just 1 month, it'll then be 4.75% the whole way. And so this is time urgent. So for those of you, I know some of you even talked to myself and or Parker about this and say, hey, this is kind of a cool strategy. I might want to do this. This would be the time right now to do it, especially if you want to get money locked up that's actually going to be protected and still accessible. And of course, that money you're able to use. You don't have to wait 10 years to get this money. This is money you can be using throughout. But obviously, it would be nice, of course, that you could have a nice, steady, predictable income stream that comes from it that's, of course, tax-free. So guys, I just want to make sure I get this update because, again, this is time sensitive. It's got to be done this month. Otherwise, the interest rate will lower 0.75% starting next month. So you've been given forewarning. If you have questions, you can just reach out to us and or, of course, book a time on the calendar here on the Freedom Founders portal. Let us know if you have any questions. Thanks.